time of the day to be here.
Hello and welcome to the CNBC-TV18 special. We're coming to you from Monte Carlo, once again playing host to the EY World Entrepreneur of the Year Awards 2016. Representing India is the family from Lupin, Vinita and Nilesh Gupta. Appreciate you joining us and congratulations. Remember, about over 50 entrepreneurs are going to be competing for the World Entrepreneur for the Year Award. But Vinita and Nilesh, let me start by asking you, what has this journey been like for you? I mean, we know from a markets perspective, from a market cap perspective, what the Lupin story has meant over the last decade or so. But for you, Vinita, personally, what's been the biggest highlight so far?
Oh, it's been a phenomenal journey. If I look at the last 10 years, and that's probably a bit too long, Shereen, but it's been a wonderful journey of taking our company from an Indian pharmaceutical company, the strong roots that we have in India, to a global, a multinational, bringing affordable quality medicines to major parts of the world, including the United States, Japan and India. So it's been a phenomenal journey of transforming the company over the last 10 years. Even in the last couple of years, the last 2-3 years, we've been preparing the company for the next phase of growth, investing into taking a generic model into complex generics, investing into a proprietary specialty pipeline, acquiring entities to gain access into new markets that we think are going to be material markets for Lupin long term. So it's been a phenomenal, very rewarding, very satisfying, fun journey, but the better part of it is yet to come.
All right, I'll get to all of that in just a second. But Nilesh, let me pick up on a point that Vinita talked about, and this hunger for acquisitions. It's been a fairly significant last 1.5 years on the acquisition front. The Gabbys acquisition, of course, is the big one at $880 million. Appetite for big ticket acquisitions still there?
So I think the appetite is from the specialty side, and big, small, all kinds is what we're looking for. I think the geographical footprint is almost complete. So I think what is missing is specialty in the US. We have some, but I think we have much more ambition on that side. So I think that's where we're looking at all kinds of assets.
So is 2016 going to be a big year on the acquisitions front, or likely to be a big year on the acquisitions front? Because, as I said, over the past decade, about a dozen odd, and most of them have happened in the last 1.5 years or so, or 2 years or so.
Yes, so about almost 15 in the last decade, and more than 6 in the last 2 years. I think the first step in 2016 is to integrate Gabbys. It's actually going really, really well. But we're on the prowl for specialties. So I think we're looking, and whenever it happens, we want to be there, making sure that it does.
Okay.
Well, we have enough of an appetite. Hopefully we can find enough to meet our appetite.
Haven't found anything interesting yet?
Well, we have looked at a lot.
Or are you spoiled for choice?
No, I wish we were.
I mean, from our perspective, it has to be a very strong strategic fit as well as other things for the organization. And that's what we spend a lot of time on, and we hope there will be enough for us to be able to bring into the company and provide new avenues for growth.
Okay, we're talking about growth, and let me ask you about the long-term picture. You had an aspiration of $5 billion by 2018. You've brought that down to about $3.5 billion. Do you believe that you're going to be able to stick with the $3.5 billion? And what kind of concerns at this point, and I'll come specifically to the FDA-related concerns, but on the big picture, what are the main concerns that you're focused on?
So our aspiration is still to get to $5 billion in revenues. That is truly the aspiration. But with all the investments that we have made so far as an organization, both organic as well as acquisitions in the last couple of years, and the changes in the marketplace that we have experienced with all the customer consolidation that's going on in the industry, when we look at the realities of the market, we believe based on the current investments, we have visibility to $3.5 billion. That doesn't mean we will stop there. We continue to look for other growth opportunities, other acquisition opportunities, in particular, like Nilesh said,
on the
specialty side of the business, that will help us get closer to that number.
So you're still aspiring for $5 billion, but you believe you'll be closer to $3.5?
Well, based on what we see right now, the visibility that we have organically with what we have right now and the companies that we've acquired, we believe we'll be at that level.
Okay, let me get down to what everybody wants to talk about, and that is the issues as far as the US FDA is concerned. I mean, every analyst report talks about that being the near-term overhang as far as the stock is concerned. Where do things currently stand? Because you have submitted your response to the US FDA FDA. Have things moved forward? What is the sense that you get?
Sure. So over the last 6 months, there was actually a concern on 3 sides, right? And we knew that the concern was overhyped, at least on 2 of them, and we've been able to settle that. So we got
Mandideep is cleared.
Mandideep and Aurangabad are clear, and those are closed.
And for people who don't understand what an EIR means, it's essentially saying that it's an all clear from the US FDA.
It's a closure of the inspection, and that yes, the site is fine, and obviously you remain open to be audited at a later point of time.
So the recent recall from Mandideep, was that a mandatory recall because of the EIR, or can you explain what that was on account of?
So as a part of the 483s, we felt that that was something that we needed to do, so we voluntarily did it, and so the FDA knew about that. So the EIR came well after the recall was done itself. So to me, it's all a done and closed matter. I know that there was some concern in India in the last couple of days on that count, but nothing to worry.
So Mandideep and Aurangabad are back to business as usual.
Yes. So, and Goa is obviously the other one where we had 9 observations and then 9 again. We've responded pretty comprehensively to the FDA. We sent an update thereafter as well.
When was the last update that you sent?
We sent it in June. Yeah, I'm sorry, we sent it in May, and we'll actually follow it up with another one in June.
Okay.
And the plan is really, right now it's just about, these are all the things we committed, and this is the update on that. And we're actually adding new stuff along the way as well. I think it's going to be another 3 odd months before we close everything that we had committed to. To the FDA, we committed till December, but we're really trying to see how we can do it even sooner. I think we put our best foot forward. We've asked for a meeting with the FDA. They haven't granted us that yet. To me, that'll be a critical event if they do grant us that. And if they determine one way or the other before that, then we will know.
So just to understand, the observations that the FDA had made, the action on those observations, you believe you will be able to put all of that to rest by over the next 3 months, and of course then it's incumbent on the FDA to take a call.
Yes, so we've actually committed till December to the FDA, but we're trying internally to actually make it happen even sooner.
Okay, if there are delays, and that's the other concern, and I know there is an ongoing site transfer process that's already on, what will that mean in terms of product launches and your plans as far as the Goa facility is concerned?
So if the FDA does hold back approvals in the meanwhile, so then obviously we won't get new approvals from Goa. It doesn't affect any of the existing business. Like Vinita shared earlier, pretty much all the big building blocks for FY17 are already in place. They're already baked in. So the key products that we wanted to launch are actually launched already, including from Goa. The lion's, I wouldn't say the lion's share, but majority of the approvals that we have pending with the FDA are now from non-Goa sites.
Okay.
So we have sites
so you
like
have
Indore.
About 36 pending approvals, if
we
my
have
memory
almost 100.
Okay.
And I would say about 30 of them are from Goa, and the rest of it are from other newer sites that we set up. So I think a lot of the new approvals will come. There's a lot that we're expecting from India. We're expecting a lot from Gabbys as well in terms of new approval action. And if the FDA closes everything, then obviously Goa will be back on track.
So do you have any sense of by when we could finally see closure on this?
It's total
can't preempt what the US regulator does.
No. I think it depends on whether they decide that they want to do a re-inspection, for example. So it's hard to say at this point of time. But like I said, we put our best foot forward. Let's see how it goes.
Vinita, you've also talked about how Lupin is now going to sort of look at a holistic quality transformation as well. What is that going to entail? And it's not just Lupin, but several Indian companies, or pretty much every Indian company at this point in time, is in some sort of tangle with the US FDA, in the US FDA's crosshairs. Why is that?
Why? I believe very firmly it's because the foreign inspections have a very different format than US inspections. I mean, you have new inspectors that arrive at your site. We've never had the same inspector come back to a site again, and every inspector is going to look at it from their perspective with a new lens. So they're always going to catch something new. And we treat it as a learning experience. I mean, we know that a new inspector is going to come up with their own set of concerns, and we'll treat it as a learning experience. What we are doing across all our sites is making sure that we are ahead of the curve. I mean, anything that we learn at one of our sites is applied across all of our sites.
Okay.
Plus, anytime the FDA issues any warning letter or a 483 to any organization, any major organization that currently supplies products to the FDA, to the US, we will learn, we will go through it, screen it, see what we can learn from it so that we can bring our standard up to a different level to be above and beyond what the FDA is looking for at all points in time.
Okay. Let me then ask you in terms of R&D investments, and you have said that R&D investments are likely to go up from 12 to about 12 to 15%. What is that going to mean as far as Lupin is concerned, and when is that finally going to start to kick in, from a revenue and a bottom line perspective for you?
So our R&D investment has ramped up over the last 5 years. 5 years ago it used to be the 7-8% level, and now this past year was 11-12% level. And you see the result of it. I mean, if you look at our growth over the last 5 years, it's because of our pipeline. The fact that we have invested into high barrier, more barriers to entry, therefore limited competition, higher margin potential pipeline. That's why you see the margin expansion that you see in our business over the last 5 years. So we very strongly believe that the investment that we are making today in R&D is going to yield results over the next 3 to 5 years.
Okay.
Otherwise, we wouldn't do it.
What kind of results?
We expect to continue our growth momentum as an organization from a revenue perspective. We expect to continue our margin expansion, as an organization based on the investments that we are making. So, the investments that we are making in R&D, are one, to evolve our generic pipeline into complex generics. So areas of high barriers like inhalation, device-related area products, and biosimilars to a certain extent. A specialty pipeline, to help us grow our specialty business. Those are the areas that we are investing, so which are very strategic to our business.
So what could the margins then look like 3 or 5 years down the line for you?
Well, we hope to be able to. We have been, if you look at all our quarters over the last few years, our margins at the highest have been at 30% level, and we'd like to be able to beat that 30% EBITDA margin.
Okay. Well, that's a good target to have for yourself. But let me ask you about your core markets, and I'll get to the US in just a second. But let me ask you about India. Last quarter, a growth of about 15% for the India market. What's your sense, given the regulatory uncertainty that continues in India at this point in time?
So India is a hostile market at this point, and everybody I talk to in the industry is concerned about what's happening in India. And if you really look at the last couple of months, growth has come down significantly for the market. Our mandate in India has been a little different. So I think, the challenges in India. So there's obviously the pricing and the expanding price control list and negative WPI. So there's been a lot of challenges in India. There's the FDC ban, so there's a lot of gloom out there. We, for our part, added 1,000 representatives in Q4, and I think that's a clear sign of where we want to take this in India. I think there's one part of what the market grows at and what you can grow as a multiple of that. The other is the kind of market share that you can grow. We're still very small. 3% is nowhere where we'd like to be long term.
So what is the target for yourself?
So I think we need to get to 5% at some point of time.
By when?
We don't give guidances. This is clear direction. No, so I think the ambition would be to keep growing at anywhere from 1.5 to 2 times the market growth rate, and that's what we've done these last 5-10 years as well. That's what we want to continue. We're also adding new flavors to it. So there's OTC, for example. We have a pilot running in the country right now. In the next 6 months, we should do a nationwide rollout for an OTC portfolio. We've never done OTC before. So I think there's also these newer angles. We added 5 new divisions in India. There's a lot more new products, a lot more alliances with multinationals as well. So despite the challenges,
are we likely to see more tie-ups?
Yes, for sure.
The kind that you have with Lilly, etc.
Yes, I think, and some of those tie-ups are getting deeper as well. So more with Novartis, more with Merck. These are all on the cards. More with Lilly as well. We certainly are going to expand our alliances. We've actually been perhaps the most successful in getting alliances with multinationals, and we want to continue that.
Okay, let me ask you now about the US. And you mentioned that the customer consolidation has had an impact as far as pricing is concerned, but you've seen a very strong growth in the last quarter for your US business, up about 54%. Where do you see the US market, and what's the aspiration really as far as growth for the US market is concerned? Not a guidance, directionally.
Well, we see it as a very lucrative market for the organization, and it continues to be the largest part of our focus from the standpoint of growth for the organization in the coming years. The generic side of the business certainly has been under a lot of pressure. We believe the majority of the consolidation that was to happen has happened. The last bit of it is McKesson and Walmart coming together. That's happening right now. And all of the pricing impact based on the customer consolidation has also happened. So going forward, we think that the market is going to be stable for generic companies to be able to afford the investment that we are making in R&D and manufacturing to be able to service the market effectively. I mean, from the R&D investment that we are making right now into complex generics, we expect it to pay off over the next 5 years. I mean, the last couple of years, we've been investing into areas like dermatology, like controlled substances with the acquisition of Gabbys, inhalation products like metered dose inhalers, dry powder inhalers, limited by biologics, complex injectables. All of these we expect to play out over the next 5 years to help us grow our business, expand our margin.
So what kind of contribution do you see from these specific categories that you just spoke about? I mean, what's the kind of aspiration that you see for these specific categories over the next 3 to 5 years as you build them out?
Like Neelesh said, we don't give guidance.
But it's a broad sense.
Chunk. If you think about FY17, this financial year, we'll start with derm. It'll start coming to market. Some of the nasal sprays that we file will come to market next financial year. The year after that, of course, the MDI, followed shortly by DPI, eventually the biosimilar. So you will see a good part of that complexity panning out in the market, and literally almost one therapy area every year.
And I will add to that, you know, like Neelesh said about the Indian market, we're still very small. We're a very small percentage of the US market today. I mean, we are reaching close to $1 billion in revenues, and you look at the larger companies at multi-billion dollars, $4 to $5 billion in revenues. So we have significant potential for growth.
Yeah. Well, speaking about the levers for growth, and you know, in a business like yours, what is going to be the key differentiator that separates Lupin from the rest?
I mean, one, how we execute on a strategy. I mean, I think we have a very, very strong strategic plan in place. We have to execute on these new technology platforms that we just spoke about. We have to bring products to market, have to file products and bring products to market so that execution risk. On the specialty front, we have to do a lot of work. I mean, so we need to, in the near term, build our business back to at the level it was a couple of years ago before Suprax went generic. And we believe we now have good near-term growth drivers to build a brand business again. But in the long term, we need to build an effective pipeline, a real engine to be able to grow our brand business.
So, you know, outside of what the US FDA does, I mean, that of course is a key concern, but outside of that, what would you be worried about today as you look at your deck? You know, what are the critical areas of concern?
So I think we need to deliver on the R&D pipeline. We've taken some very meaningful bites. We need to deliver. We're talking about much more expensive clinical trial-based kind of products. We need to deliver on that pipeline. We need to keep our eyes on operational excellence. Obviously, compliance remains a key part. And then, like Vinitha said, the commercial excellence in being able to effectively commercialize the you know, if you want to commercialize a biosimilar, there's a commercial risk to that as well. It's not just about being able to bring that product to market. Is it going to be branded? Is it going to be generic? Is it going to be somewhere in between? We need to play the cards right on that part as well.
Okay. Let me ask the two of you a question. You know, you're here at the World Entrepreneur Award, and you know, the tendency usually is to think of second-generation entrepreneurs as people who've had it easy, they've got it on a platter, and so on and so forth. But I'm sure the truth is very, very different.
No, we had it very easy.
Really? Okay. So seriously, what has been the hardest part of taking a business that existed, you know, a legacy business forward?
Well, we had a very tough act to follow. I mean, for certain, what DBG, what our father created and established, you know, an amazing platform that made, you know, material difference in India. I mean, it was difficult to really, you know, to follow that act and have enough of a differentiation to be able to, you know, set apart what we can do for the organization going forward. But I believe we have done that. I mean, if you look at the both of us, I mean, when I joined the company, the company was primarily an Indian pharmaceutical company. With hardly any presence outside of India. And my dream was to take the company global, starting with the largest market, the US. If you look at what we have done over the last 10 years, we have executed on that plan. So it's not been easy.
Yeah, I think to in Lupin we needed to earn our stripes, and I think that's what Lupin stands for, and that's what Lupin will always stand for. So I think we had to build our own space, excel at what we did before we were accepted, and then obviously the transition, which was very natural as well. We're bringing a lot more in our leadership team. So in the last year, we've added 4 presidents in Lupin, and that's unheard of. But that talks about the depth, the muscle that we're adding across geographies: Asia Pacific, Latin America, Europe, Middle East, Africa. So there's a lot more bandwidth that we're adding now.
You know, when I just joined the company, my father, DBG, said that he wants Lupin to be a company where family work like professionals and professionals feel like family. And that was very important learning for me early in the...
But speaking of family, you know, it's hard enough trying to convince everyone on what to order for dinner. How do you sort of, you know...
sort things out?
Yeah, sort things out.
You know, our dining table, talking about dinner, our dining table conversations were always about the business. And there was a week when Mom said, for a week, let's not talk about business on the dining table. It was a very quiet week. You know? So we all love the business. Nilesh and I love the business, and it's not that every time we see eye to eye on everything.
What's been the
9 times out of 10?
The issue that you've had your worst disagreement over?
Oh, I think there's always something that come up, but I think so. I will give a couple of examples, but I think the
a couple of examples.
Right, let me take out the list. But I think the passion to build the business is just so strong. That's what drives the biggest level of alignment. But for example, R&D, right? So we've had a tough year. You know, while we're talking about the increase in spend, it's almost a 50% increase in the spend. Where should we place this spend? Should we do much more in inhalation? Should we do new chemical entities? Should we do biosimilars? What are we ready for? What is important for Lupin at that point? You can't have natural alignment on that. I think you have to go through a process to do that, and we've evolved some pretty good processes on that. I think we've got good people, we've got good advisors as well that we've engaged, and I think that all of that helps us to come to consensus. So we've always been a consensus-driven company, and I think we work hard to make sure that we come to that consensus, and then we stick with it.
Okay. You know, as investors who are watching this show, and you've articulated what your long-term as well as your short and medium-term vision for the company is, but you've delivered on growth and the kind of numbers that you've promised quarter after quarter, on the 20% plus kind of margins that you've promised. As investors who are watching this, I mean, what is the single message that you would like to send out as far as Lupin is concerned? Because, you know, there's all of this business on valuations and growth potential and the regulatory concerns, etc. But what is the message that you would like to send out to investors?
Well, I would suggest, I would ask that they look at the performance of the company over the last many years, not just a couple of quarters, and not get too perturbed about an event here or there. You know, the company is not a company for a quarter, 1 quarter, 2 quarters, 3 quarters. We think long term. We've always been long-term thinkers, and as long as they are long-term investors in our organization, they will stand to benefit.
I was going to say the same. I think we're here for the long term, and our lens is extremely long term in terms of thinking as well. We can't even think quarter to quarter, right? We just can't think of that, and I think investors have placed a huge trust in us all these years. I know that there was concern on Gabbys, for example, on the valuation. But I think
But give us a sense of what we can expect on the Gabbys front. Both of you have spoken about how confident you feel about that, but what can we expect on Gabbys?
We feel very good about the Gabbys numbers, right? So Vineet has talked earlier about 3 times in 3 years. We're on track for that, right? You know, maybe we'll be at 2.5, maybe we'll be at 3.5, but the broad direction is absolutely correct. So I think the portfolio from Gabbys is a very interesting one. An interesting number of filings will happen this year as well, moves on the specialty side as well. Generics is what we really understand, right? And Gabbys is right in that sweet spot with a lot of complementarity to what we were looking for. So I think we'll make a great success out of Gabbys.
Vinitha, you want to add to that on Gabbys?
Well, you know, I believe in it. Otherwise, I wouldn't have made that investment. But
and a pretty large one as well.
A large one, but we're already seeing the results of it. I mean, it's paved our way into women's health in the U.S., which is a nice growth driver for our brand business, specialty business going forward. We are seeing approvals come through at Somerset at Gabbys. We are looking at, we have a fantastic team there that we've been able to retain. We've added to the leadership team, and we believe that it'll be a significant growth driver for the organization going forward.
So the key priorities for FY17 before I let the two of you go.
So delivering on the R&D pipeline, obviously sorting out the Goa matter as well.
And commercial excellence.
And commercial excellence. Well, Vinitha and Nilesh, it was lovely talking to the two of you. We wish you the very best of luck, and congratulations once again on representing India here on a global stage at the World Entrepreneur of the Year Awards 2016. Thanks very much for joining us here on CNBC TV18. With that, it is time for us to wrap up the CNBC TV18 special from Monte Carlo from the Ernst & Young World Entrepreneur of the Year Awards.